Hi traders, welcome to my video on the Donchian Channel's indicator. So basically this is an indicator that you can find for free online that you can attach to your charts in your trading platform. It's a good indicator for determining a variety of things from ranges, trends, breakouts, reversals. It's relatively easy to understand. As you can see, I already have it here on my chart. You have this upper channel area here. Okay, anything above the middle line. And then you have the lower channel, which is, of course, below the middle line. So as I said, you can use this indicator for both trending and ranging markets. If you want to use it in a trending market, this is how I like to interpret the indicator. So I look for a market trend, clear up trend here. This is a dollar-yen 1 hour chart. Okay, so you can see that we're in an uptrend. Price is above the middle line, and there is a breakout of the channel here. Okay, which suggests good upwards momentum and potential trade opportunity into this bullish trend. Okay, and one of the good things about this indicator as well is it marks off support and resistance for you. For example, it's marking resistance here, which you could have used for your entry point, a breakout of that resistance, which would have gave you a nice trade that's up over 400 pips in the space of a week, which is excellent. As I'm sure you agree. Let me just check back on that. Yeah, that is a really good trade. Okay, so you could have manually marked resistance here if you wanted to, and you would have got in slightly early. However, it's handy to have the indicator do it for you. Some of you may argue you can enter on this pullback here to the middle line, which is fair enough. There's a spinning top candlestick pattern there. Clear uptrend. You do have this support level. Price is bouncing off 1, 2, 3, 4, 5. Failed to close below it. You know, that can be a sign of entry there as well. Another good thing about this indicator is you can be used for money management, particularly your stop loss. For example, if you're trading in the upwards direction, you can use this middle line for your initial stop, your initial stop loss, and to trail the stop. So you can move your stop loss as price was going up. If you're in this trade, you can move your stop loss all the way up, and you would have had a nice trade there. Okay, well, if you argue, oh well, I was taken out here and the price continued, well, that's fine. You could have just closed part of the position, moved your stop loss to break even or around here somewhere. Just if price did turn around, you still have more profit, and allow the rest to run. And if you allowed it to run, you could have gained a lot more. If you closed your whole position here, if you were taken out on the trailing stop there, you could have re-entered on the breakout here. As I said, the Donchian Channel, in my opinion, doesn't always do the best job in doing marking support and resistance. I probably would have marked my resistance more on the close, on the prices here, the candle bodies, rather than the wicks. And you could have got in on the breakout there. That being said, Donchian Channel being there would have almost been in agreement in any case. So as you can see, it's a good indicator for trading breakouts in the direction of the trend. You can also use the lower level for your stop loss, for trailing your stop loss, although it's obviously going to be a lot wider, which will not help your risk to reward ratio. I find that the middle line tends to be sufficient. Many traders say to look for short trades when price is on the other side of that middle Donchian channel, so there's an argument for that as well. But there's a couple of good trades there based on the Donchian. Here we have an example of a downtrend. Okay, we have our resistance at the top here. Price is rejected. Candlestick patterns clearly showing indecision, but then big bearish candle there. The inside bar. Price comes below the middle line. I mean, some traders would enter that early. You know, others would wait for a breakout confirmation. I mean, if you did enter that early, more often than not in chopping markets, you're going to get whipsawed in and out of trades. So I tend to like to wait for a pullback and an obvious trend, let's say. For example, here would have been a decent entry point. The reason I mention that is because if we go back to this support level, this previous support, we know that that's a strong support level, and we can see it's emphasized there with that big candle that drops down there. So that would have been a potential entry point. The Donchian clearly showing you we are in a downtrend, breakout of the channel, which would have been up around here. It's worth mentioning at the time of the whilst we were in this candle. So we could have gone down with it. Wow, this would have been another good move. It just goes to show this indicator, when used correctly, can catch some big moves. I mean, 400 pips plus again, fantastic. Even better, you can have a really tight stop loss around 20 pips. And you could have trailed it. You would have been taken out prematurely then. But there's opportunity to re-enter, and you don't necessarily have to use it for your trailing stop. And you could have closed part of the position, let the rest run. Could have kept your stop loss on the other side of this. It just depends on your own risk preferences. Money management at a minimum, I would personally move my stop loss to break even, the earliest opportunity, just to allow the trade to play out and not worry about a winning trade turning into a losing one. Another thing worth mentioning is you can trade the pullbacks of the middle line. So in this downtrend here, if you don't want to trade the breakouts, you can wait for price to come towards the middle line. There, and trade the pullbacks. Just be careful, as I said earlier, when price goes on the other side of the middle Donchian channel, it can signify a change of trend direction. Also, this is not just a trending indicator. As I said, it can be used in ranging markets. We have a clear range here, up, down. It's going to happen on the UJ from time to time. So in this instance, you can trade, instead of trading breakouts, you're going to do the opposite. You're going to trade reversals. So basically buy around the lower channel, sell around the higher channel. Buy there, sell there, buy there, sell there, sell there. Again, if you would have been trading in this range and you bought there, you would have had a sensible stop loss hopefully in place. So when price did fall below, you were taken out at an early opportunity rather than using too wide a stop loss. Some people use the middle line to take all their profit or part of their profit if using this for reversal trading. For example, buy here, close some of the position, if not all of it there. Sell here, close there. Sell here, close there. Obviously, always keep an eye on price action, candlestick patterns for confirmation. And that's just if you're using the Donchian Channel indicator alone with price action, support, resistance. Don't forget you can always add other indicators. For example, a stochastic indicator can be good for trading in ranges. and trends for that matter. You know, you can time your entry into a trend with stochastics, but just for argument's sake, we use this range here. Basically, the crossover of a stochastic in an extreme overbought or oversold zone is a trade-in signal in or around. So we have here, okay, you see we've had a trend downwards, but now the stochastic is here and the market's oversold. It's crossing in an upwards direction. Price is around the lower channel, so we could have used that as confirmation for a reversal trade to the up direction. Just as the crossing the overbought zone of the stochastic, price near the upper channel could suggest a sell trade if we were trading the range. Okay, another example there, crossover in an extreme, price near the upper channel, sell trade. Okay, so you can use other indicators for confirmation, or you can just use it as it is at a minimum: price action, support and resistance, and good money management as always. Okay, just to show you a stochastic confirmation there. For reversal trade, the good thing about this reversal trade is we are trading in the direction of the trend. So as we were saying earlier, we could have traded the breakout here. Remember the breakout either here or here of resistance to get in this up move. However, we could have got in earlier if we were trading reversals with a crossover of the stochastics in the extreme oversold zone. Yeah. So there are numerous ways which you can use the indicator. Confirm your entry. Most important thing is to just use it to determine, okay, is the market ranging or is it trending? Which direction am I looking to trade? And keep an eye out on price action for confirmation. Okay, the indicator can be used on any trading instrument or chart time frame. I personally prefer to use the higher chart time frames just because I find the signals tend to be more reliable because there's more price data included. That being said, if you're scalping, day trading, you know, you can use it on 5-minute charts, 50-minute charts, whichever you prefer. Just bear in mind that if you're trading longer chart time frames, tends to filter out some of the noise, plus it means less time chart watching and you can catch some big moves. I mean, I'd rather take one big trade for 400 pips than, you know, trying to take 40 trades for 10 pips. So it's just up to you, really. It depends on your preferences. Okay, well, thank you for watching. Hopefully you found something useful in this video. Please like and subscribe for more.